Hey there, it's Mike Wise, CMG Home Loans with your weekly mortgage update. It has been a fun, exhilarating ride this week in the market. You've got a lot of stuff going on here as far as the stock market, the bond market. Let's take a look at what is happening. So, stock market, like where is it going? It's gone up, it's gone down, it's gone all over the place. And it's been a wild, wild ride with these tariffs. So the tariffs are another thing that are in play here, and I'll go into those at a little bit different. Now, if we just had the consumer price index and the producer price index out, that would be amazing news for the stock market or for the bond market, and we would see lower interest rates. But that's not the case this week. But let me give you just a quick rundown. CPI came out on Wednesday or Thursday, I forgot, Wednesday or Thursday, and the core CPI, the year over year, is at 2.79%. It was down 0.3% year over year. So it was good news for the bond market. The bond market did get a little bit of a rally at some point in time with these news. But the big impact here, shelter costs. I know that I talked to you a lot about the shelter costs, and that had a big impact. It came down 0.2% year over year, and it was mostly because of the lodging away from home. That is your short-term rentals, it's hotels, it's all that stuff. That has come down. The prices have come down there. Less people are traveling right now, and so forth. So same thing. Airlines, those fell 5.3%. Used cars went down. Motor vehicle insurance went down. Those were all big movers on that. So if you took all of those things there, you're talking about, let's go over here to the year over year effect. So you're talking about 2.79%, 2.8% is the CPI. And of that, 1.76 is the shelter cost. The airline, they went down 0.6. Used cars went up 0.02. Motor vehicle went up 0.27. So everything else is at 0.8%. With all that in play, without the shelter lag, you're at 1.7%. So with the shelter lag, which I'm not going to go into details on, it would be much lower than that. So everything is trending in the right direction. Then on Friday, the PPI came out, and the producer price index, that fell as well. That's the wholesale level. So that's where goods and services are made or they're manufactured. Energy was a huge piece of that. Food costs were a big piece of that as well. And so that's where we picked up, and it dropped significantly. It was a negative number, and that was good news for the market. So what happened in the stock market? Well, you can see over here, this is like a 3-month look at the stock market, Dow Jones, and you can see this week when the tariffs were announced, the extra tariffs were announced, the market went crazy for 2 days down, and then they put a pause on the tariffs. Market rallied, came back up, and then the trade war with China kind of sparked things around a little bit further there. So what normally happens with this, when the stock market, tanks like that, usually everybody moves their money over to the bond market. That improves the prices on the bond market. The yields come down. Well, that didn't quite happen because there's a lot of nervous people out there. The countries that were, in the bond market, or in the stock market, they're not buying in the bond market right now. So what they're doing is they're buying gold. Gold is at an all-time high right now, so that's gone up significantly. And you can see by this chart over here, that's the safe haven for people in the market at this point in time. So it's a big change as far as what's going on in the market. So let me show you a quick look here before I go to that last slide there. On the vibe board, we're going to talk about what happened here. So April 2nd came out here, right? April 2nd, this is when the markets closed. President Trump announced the tariffs. It was the base tariff of the 10%, and then they went in with all the other tariffs as well. And so 90% was one of them for Vietnam. It's a big numbers for tariffs, and that's when the market The reaction on April 3rd in the market was basically like, okay, let's move the money over to the bond market, and they moved it over. The yield went down to 4.05%. The stock market tanked, and then April 4th, China retaliated with 34% tariff on goods. What happened? The bond market got a little bit better. It went down to 4.01%, and then the Nasdaq it tanked again. Well, April 7th, the additional 50% on China with the U.S. to China. That kind of started the bond market in the reverse direction at that point in time. And so that's when the bond market, the yield went up to 4.19%. That's a big move in one day. Nasdaq got better because they put a pause on the rest of the tariffs with everybody else except for China. So that was kind of like what was going on. And then on April 9th, the yield went up another 7 basis points because China and the U.S., they are in a trade war at this point in time. And the stock market still got a little bit better there. But at the end of the day, there's a lot of stuff, a lot of reaction to what's happening in the market. So let's take a look, just the yields. So this is live data right now. And I can show you, like, it's been moving a lot right now. But at the end of the day, this was where we went down to 390 on the yield on the 10-year Treasury. We moved all the way back up. We went to 460, and today we're actually coming back down now. It's a better move right now, but at the end of the day, we were up. You can see the high for the day was 458. It almost hit 460. And now we're back down to 447. So we were up another 17 or 11 basis points on the yield. So we're back down here. The bond market, man, it's just the pricing on this. Let's look at it here. It moves again in the opposite direction. So the prices went all the way down here. They've come back up a little bit as of this morning, but it's very, very volatile. Not a great time to lock in any interest rates during this time frame. It's just kind of sit tight and wait and see what happens here. So mortgage rates. Mortgage rates are sitting right around 7% on 30-year fixed rate conforming and jumbo. FHA and VA right around 6.44%. A lot of activity up and down. Very hard to quote interest rates on this, but it's a lot of movement that is going on. So at the end of the day, there's a lot of activity. So the big question is, what would you do if you were the Fed at this point in time? So the Fed, they charge, the government is charging tariffs. That is inflationary. So when goods and services come into the United States, they're being taxed. They're taxed at the ports. Once that tax goes into play, as the buyer of those goods and services, you have to pay that tax at that point in time. Well, you're going to pass that on to the consumer. The prices go up. That's inflationary, right? But at the same time, the Fed, they've been working on inflation. They've raised the Fed funds rate enough to bring inflation down, to slow down the economy. And it's starting to slow down, and the inflation is coming down as well. So not only did the Fed do their job, it is doing well, right? They're bringing the inflation down. They're slowing down the economy, but they're slowing it so far down that it's probably in a recession at this point in time. In fact, Jamie Dimon this week, he said that we're probably already in a recession. So during a recessionary times, the Fed needs to lower the Fed funds rate to spur the economy a little bit. But the tariffs are going into play, which is going to raise prices. So there's a lot of things going on. Again, what would you do if you were the Fed at this point in time? They have a meeting. Their meeting is going to be the first week in May, and that week they're going to determine what they're going to do with the Fed funds rate. It is it's kind of in a predicament at this point in time because they've talked about now they were lowering the Fed funds rate maybe 1 to 2 times this year, and now there's talk that they're going to lower 4 to 5 times. Well, if they lower 4 to 5 times this year, that is going to have a big impact on interest rates through the end of this year, right? So be on the watch out for what the Fed is going to do with interest rates. I'll be reporting on it in a couple of weeks here after their meeting. But anyways, this is Mike Wise with your weekly mortgage update. Hope you have a great weekend. I will be around all weekend. If you have any questions, please feel free to reach out to me, and we will talk to you next week.